Good afternoon, ladies and gentlemen. Welcome back to Business Today Television. First quarter earnings are upon us, and the April-June quarter hasn't been as good as it was likely to be expected by equity strategists, by fund managers. Lots of disappointment coming in, but there are a few outstanding earnings that have defied the general trend, and the numbers look really good. We are now looking at the first quarter earnings of Bank of India, and we are joined by Shri Rajneesh Karnatak, MD and CEO at the public sector entity. The numbers will be appearing right in front of you on screen. I'll just give you the basic ones. Net profit for the quarter gone by, which is first quarter, is up 32% year on year to 2,252 crore rupees. Everything that you measure for a good bank is in place. Falling NPAs, falling gross non-performing assets, rising credit growth, as also fall in the cost of deposits. Mr. Karnatak, let's discuss these numbers in details. Firstly, a very warm welcome to you, and I hope that the first quarter gives us an indication of better days, better months and better quarters ahead. Let us first try and understand how come this 32% rise in Q1 profit happened year on year, and what is the overall credit growth that Bank of India experienced in the 3 months gone by?
Yeah, so as far as the net profit is concerned, as you rightly said, that the YOY growth has been around 32%, and we have touched a net profit number which is more than 2,000 crore, in fact 2,235 to be exact. And this is at the backdrop of the better non-interest income that we were able to get, and also the net interest margins because of the improvement in the credit which has happened. So if you see the credit side, the YOY growth in the global credit has been at around 12%. So that is the number. And as far as the domestic credit is there also we have seen good robust growth of a double digit. With these two things and plus the non-interest income and the good recoveries that we have shown during this quarter, also more than 2,000 crores of gross cash recovery. All these three things have contributed for the improvement in the net profit, and which has given an improvement of nearly 32% on a YOY basis.
Mr. Karnatak, let's focus on credit growth, especially those emanating from the rural, agricultural and the MSME space. What has been the growth? Are there any outstanding geographical areas that have shown higher credit growth, or sectors where you've experienced a higher demand for credit?
As far as the RAM credit growth is there, retail, agriculture and MSME as you asked. So retail growth we had around 19% on a YOY basis, in fact more than 19%. Agriculture was more than 12% YOY growth, and MSME number was more than 17% of on the YOY basis. As far as the overall RAM growth is concerned, we had grown at more than 16% on the overall RAM side. So good growth we have seen in the overall segment is concerned. As regards any particular geography is there, so it is agnostic to any geography for the simple reason that we are a nationalized bank, which we are present across the country, pan-India present, north, south, east, west and central India. So the growth has come from all segments and sectors and geographies.
Mr. Karnatak, you would also be readjusting your your liability book given the 3 rate cuts that have happened by the Reserve Bank of India in the last 9 months. How has that process progressed? What is the growth in CASA? Are you happy with this sub 40% segment that you have in terms of CASA?
So as far as CASA is concerned, if you see our number is in percentage terms 39.88%. So it is just only 12 basis point less than 40. So we are equal to nearly 40 only. So further, if I give you more detail in that, in our retail term deposits are improving, and further I can tell that as far as the domestic credit deposit growth is concerned, only 14%, in fact less than 14% of our domestic deposit is bulk deposit, which means that 86% of our domestic deposit is either CASA deposit or retail term deposit. As far as the rate cuts which have been there, already we have taken the rate cut as far as the February rate cut and the April rate cut which has happened on the repo side in our quarterly one balance sheet. It has been, the loans have been repriced. As far as the June cut is there, those 60% of our book is in the EBLR book, which is the repo book. That has already been reprice in the month of June, though full quarter impact has not come, but definitely full quarter impact of that 50 basis point cut which happened in June will also happen in the Q2. So we
Okay.
feel that after the this September quarter, the net interest income and net interest margin should be stabilizing.
Okay, so that's what my next question was, that post September you see a rising NIM, a rising return on asset, mainly because the repricing of fixed deposits will be done, which was because of the rate cut of RBI. Am I right?
Right. So let me further clarify. We feel that our NIM, which was 2.55% in the month of June, quarter of June, which had dropped by 6 basis points from March, which was at that time 2.61%. We feel that 2.55 global NIM has bottomed out, and for the simple reason that in this quarter, in this coming quarter, September quarter, we'll be seeing more credit happening, and the average daily credit outstanding will improve, which will give better improvement in the our interest income from the advances side. And on the other side, on the interest expenses side, as you rightly said, that there will be fall in the deposit rates also. Already we have cut our saving rate, and we will be further cutting some of the deposit rates. That will again go for the repricing, and the transmission will happen on the liability side also. With these things happening, we are very confident that 2.55 global NIM is bottomed out, and after the September quarter, we should start seeing the improvement both in the net interest income and net interest margins.
And how about other income, which is a part of treasury operations? A rate cut essentially means that the lakhs and lakhs of crores that you hold as government securities will see a rise in asset prices. How do you think that is shaping up?
Yeah, as far as non-interest income is concerned, if you see our data, so more than 2000 crore has been our non-interest income. So consistently over the 3 quarters, our non-interest income has been now above 2000 crore per quarter. So it not only constitutes the treasury income, which is the sale through the open market operations, but it also includes income from third-party products, income from the exchange income through the forex income which is there. Apart from that, there is also income from the return of accounts, recovery from the return of accounts, and also income from the other charges which we levy on the liability side and on the loan book, like LCVG charges, process fee, upfront fee, and other things. So we are very confident this run rate of 2000 crore per quarter in non-interest income will continue to maintain. And obviously the treasury income should also be there coming as it has been coming. So all these things taken together should help in improving the profitability of the bank.
Okay, let's look at the recovery side. GNPA, which is gross net performing asset, has dipped substantially to by 170 basis points to 2.92%, and there has been a sharp fall in the net NPA as well. I have two questions. Is this fall related to rising credit growth, or have you made substantial recoveries?
Yeah, so if I give you the sense in the gross NPA and net NPA number, so the relation to credit growth is not there in the absolute numbers. So if you see our absolute number in the gross NPA numbers, for the first time we have brought our gross NPA below 20,000 crores. So we are at 19,650 crores. And in percentage terms, for the first time we have come down to below 3% at
3%.
2.92%, with a reduction of, as you rightly said, at around 170 basis point on a YOY basis. On the net NPA side, again, we have come down below 5,000 crore for the first time at 4,950 crores. And in percentage terms, we have come at 0.75%. Here also the reduction is 22 basis point on a YOY basis. So the asset quality is good. We have been consistently on a quarter basis. The graph is going down on the gross NPA and the net NPA, both in percentage terms and also in the absolute amount terms. So asset quality should remain strong for the bank in this financial year also, FY26. This is at the backdrop of the fact that last year in March 26, March 25 in the whole year, we had done a gross cash recovery of around 9,500 crores. Yes. And with the kind of pipeline that we have in the recovery also, we are confident that the run rate will continue in this financial year also.
Okay, two questions. When you became the MD and CEO, what was the actual level of gross NPA and net NPA? And where do you see this gross and net NPA ending on FY26 March 31st?
So gross NPA in March 23 was somewhere around 5%, and the net NPA was also somewhere around more than 1%, near to 2%. So it has come down to the level which is there now in June 25. And as far as the guidance is concerned, in the gross NPA, we are giving a guidance for March 26 to be somewhere around 2.80%, and on the net NPA side at somewhere around 0.70%.
Okay. How about requirements for capital raising? Is anything in the pipeline?
So as far as equity capital is concerned, we do not, there is no any plan of raising any equity capital, for the simple reason that our capital adequacy is at around 17.3% as per as against the prescribed 11.5% by RBI. So we are adequately capitalized as far as the CRAR is concerned. So as regards the tier 1 and tier 2 raising, we have already taken a board approval for 5,000 crores, 2,500 crores each, which we will be raising in this coming financial year over the next 2 or 3 quarters.
Right. Mr. Karnatak, one moment. I'll request the PCI to kindly show data on stock prices as also the PE ratio and price to book and dividend yield. Yes, see, this is the weekly chart of Bank of India. Stock, despite such phenomenal balance sheet, such good financial numbers, hasn't the market hasn't recognized it, be that as it may. But one thing I wanted to check your understanding, Rajneesh ji, when you look at your financials, and let me just put this out for the benefit of our viewers, you have a price earnings ratio of about 5. You are under book, which basically means that the book value of Bank of India is above 120 rupees, and more importantly you have a dividend yield of 3.5. Book value of Bank of India is 180, gentlemen. So it's below book, single digit PE, dividend yield 3.5%. Mr. Karnatak, what is the market missing?
So see, if you see the last trends as far as the our performance is concerned, so bank has been doing fairly well with respect to the top line also. We have already touched a business global business number of more than 15 lakh crores as on June. As regards the bottom lines are concerned, operational profit, we had touched a figure of nearly 16,000 crores in March 25. As far as the net profit is concerned, there also we had crossed the figure of 9,000 crore in March 25 as against 3,200 crores in March 23. So overall, we are doing quite well, whether it is the top line, bottom line, or other key financial parameters are concerned, which includes the gross NPA, net NPA, asset quality, and other things. So management has been doing their work, and we are very focused on the management and improving the efficiency parameters in the bank, and also overall improvement in the organization structure in the bank. So we are focused into that, and we are following the process into that. As far as the pricing and other things is concerned, it is better left to the market.
It's better left to the market, and let's hope that better sense prevails. These are top quality underperforming assets. Let's just look at the share performance of Bank of India. I'll mention some very interesting statistics for our viewers. 5 years, there is, one second, let me just get the right number in front of me. This is Bank of India. This is the stock price that is right there in front of you. And yes, this is the performance that I was talking about. Given the general weakness in the market, so 3 months, 1 month it's negative, and of course year to date it's shown a dramatic 13% uptick. But look at the 5-year performance. Each year Bank of India is up 19%. So this is good multi-bagger kind of a return. 3 years, each year Bank of India has appreciated 34%. But given the problems that the PSU banking sector faced between 2004-2014, the 10-year performance is a negative 2.5%. Be that as it may, markets over a period of time always rise on higher profit and higher sales growth, and let's hope that happens for Bank of India as well. Mr. Karnatak, here's wishing you all the best for the coming quarters, and more power to reducing GNPAs and NPAs, and more power to raising credit growth. Thank you for your time.
Thank you for having me here. Thank you.
That, ladies and gentlemen, was Mr. Rajneesh Karnatak, MD and CEO of Bank of India, and of course a strong set of earnings coming in against the backdrop of a dismal Q1 by corporate India. Bank of India today is amongst the top gainers, up 3-4% at 115, 116. Early morning it was up a little bit more, but as they say, wall of worries is what is facing the Lal Street, and that's the reason why you don't see much traction beyond a 3% uptick despite a stellar 32% rise in Q1 profit. Thank you for watching. I'll be back at 3. Good morning, ladies and gentlemen. Welcome back on Business Today Television. In our ongoing coverage of first quarter earnings, we are now joined by the management of India's top decorative paints maker, Asian Paints, Mr. Amit